Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hello everyone, I'm super excited to be here today, and I really appreciate all of you are taking time to join us today. So I already saw many familiar names on our registration list, but in case we haven't met, my name is Junko Hayashida. I'm our Senior Partner Success Manager at Plug and Play, and I'll be moderating this webinar. So the pet insurance market has experienced remarkable growth in recent years, and it has been an increasingly popular solution for all pet owners. So today we are starting with a trend presentation for pet insurance space, and after the presentation, we have fireside chat. We will invite Heidi from our corporate partner Nationwide and Alexandra from Pumpkin, which is one of the popular pet insurance startups. And we will move to the open Q&A session after that. So let's kick off the keynote presentation. I would like to invite Andres and Rafael from our Plug and Play Ventures team. Andres and Rafael will share the trend presentation, what's happening in pet insurance space. So I will pass it over to you, Andres and Rafael.
Thank you, Junko.
Thank you very much, Junko.
So I'll quickly share my screen. Okay. I hope you're now seeing my screen and not the conversation we used with ChatGPT to create this presentation. No, I'm just kidding. We actually have all the sources there in case you need them. But again, repeating to what Junko said, welcome everyone, and we'll kick it off by presenting ourselves.
Well, thank you very much, Andres. I think I'll go ahead. Well, my name is Rafael Sainz. Just to give you a quick overview, as Junko and Andres mentioned, today we're going to talk about different trends and different challenges within the pet insurance industry, and how through innovation we can improve this line of business, right? So yeah, again, starting off with some introductions. My name is Rafa. I think it's easier that way. I'm part of the ventures team working for the Insurtech vertical. I've been with Plug and Play for over a year and a half now, and it's a pleasure to be here. A pleasure to be talking about this amazing space, and again, I love to see so many familiar faces. So back to you, Andres. I'll let you introduce yourself.
Thank you so much, Rafa. I'm Andres Diaz here, also from BNP Insurtech. Same as Rafa. I do have to say that I do have a bit of a focus on property and casualty, hence why I love nerding about P&C related topics in general. But of course, like pet insurance falls within this category. But I guess before I bore everyone to death with introductions of myself and Rafa's, let's jump right into it, shall we? So just quickly before we begin the presentation, we actually wanted to comment why we are talking about this, right? Like why we believe that pet insurance might be a topic or something worth to talk about. So we truly believe that pet insurance might be a topic or a trend that maybe has already been talked about for quite a bit already. So the purpose of this webinar is not just to explore the trend and talk about this trend, but also to understand the business behind it and see if it's worth pursuing it or not. And for that, we also have the amazing participation of our speakers later, right after this presentation. Now, let's jump right into it. So starting off, what everyone loves, data. I know it will be short and sweet, so please bear with us. And as a market overview, we actually wanted to first focus on three main topic areas. First, external trends that are affecting the market, then move on to how pet insurance is doing, and finally move on to private capital in this space. So beginning with the external trends, we wanted to kick it off by looking at how our customer behavior has changed over the past years. And to understand changes in customer behavior, we have to talk about generations. It is well known now that millennials are the largest pet parent group. However, we should not forget about Gen Zs, the younger generation, um, is a generation that has been raised with pets in their homes. As a matter of fact, 66% of households in the United States have pets in them. And Gen Zs are already the generation with the most widely adopted of small pets compared to the other generations. This is crucial to understand since the more time passes, the more purchasing power also changes between generations. And Gen Zs will be one of the main forces driving customer spending in the industry, giving them a lot of influence in the trends and how the market will be shaped. This drive or influence can already be observed in pet distribution channels. Here, we can observe how much product sales have gravitated towards digital channels, indicating two key trends. One, pet distribution channels are still undefined, opening up new scalable distribution opportunities that can get customers accustomed to digital and embedded distribution. And two, a shift towards digitalization indicates that pet-related purchases are done by more and more digital native consumers, also pointing at younger adoption. So this drift is becoming greater as time passes, as observed by the Washington Post on data sourced on the Bureau of Labor Statistics, where here, three key highlights can be observed. First one, older generations have been spending more time with pets since 2013. There has been a rapid acceleration of pet ownership in younger generations starting in 2018, and pet ownership has not shifted much since the last few years at peak earning age, which is between 40 to 45 years old. All in all, this actually indicates that pet ownership has also shifted from companionship in exchange for something greater. And this transition has long been coming, even before COVID. We can actually explore this in a further or in this slide, this following slide. And in that same study, it was actually found that the differences of how generations spend time in relation to kids and pets. As you can see on the left graph, we can observe time spent with kids by age, and on the right graph, we can observe time spent with pets. Here, clear differences can be observed between different generations once again. And once again, we can see that this tendency started happening even before COVID. This shows how feelings such as companionship or taking care of someone that before used to be filled with babies are now fulfilled with pets. And lastly, on consumer behavior, this generational drift and transition towards a new role for pet boils down to how pet parents are spending on their furry companions. Families can spend an average of up to 770 US dollars on their pets. And this actually ranges quite significantly between different household types, with single families spending the least and couples without kids spending the most. But of course, this is something that brands are already starting to pick up on and are adapting to be able to cater to the new customer demand. Here, we have actually three different examples of how brands have adapted. For instance, Hilton, the hotel chain, has started offering expert pet teams in some of their facilities by partnering with Mars. Hilton found that 85% of their clients had pets, and more than half of those plan their vacations around or with their pets. Or for example, Mondelez, the fruit brand, they actually acquired Cliff Bar Company for nearly $3 billion back in August of 2022. And Cliff started offering pet food products right after that, right before Christmas. And for example, our last example here is T-Mobile and their partnership with Pop. T-Mobile was actually offering a 1-year free trial to their customers as a customer acquisition strategy. But of course, we can not forget also about how demand and current macroeconomic shifts might also put pressure on customers, and how this has the potential future impact on how insurance pet adoption or like how penetration changes. It is interesting to see how food prices have gone up, or pet food prices, sorry, have gone up even more than human food prices. And as a solution for rising costs, for example, some pet parents are actually resorting to depriving their pets of long-term health by skipping pet visits or delaying medication, which in the end only worsens the pet's potential health situation. And all these changes, of course, translate into a massive market opportunity. And right now, this market adds up to a total of $136 billion. Of course, pet food and treats are the main category of products being sold back in 2022. And because there is a large market opportunity, startups are duly following this massive opportunity as we continue to see now or new startups, new solutions pop up and gather private funding across multiple health-related areas. For example, from televet solutions to healthy food supplies to hardware and wearable devices. And now over to you, Rafa, to talk about pet insurance specifically.
Sorry, guys. Thank you very much, Andres. As Andres said, right now we'll be talking about the overall market situation. So we will start with some key market indicators. Then we'll go into distribution channels, and then a quick market map with the different players that we have right now in the space. So starting with some key market indicators. First of all, what we see is right now there's 161 million pets all over North America, right? Making it one of the regions with the highest pet populations. But again, what we see is that there is a very low penetration rate, right? Only 2.48% of pets are insured, and dogs are the largest group between those insured pets. The gross written premium right now is 2.8 billion, and even though we have seen a 30.5% year-over-year growth, it still represents a very small portion of the total insurance market. California right now is leading the charge. It represents 21.6% of the total GWP in the United States, and it represents 19.3% of all of North America. Now, in relation to claims, what we see is that dogs being hit by cars are still the most expensive reason for file claims, being $51,000, the record for 2022 on a single file claim. Now, moving into distribution channels, right? We first have distribution through digital tech channels, and then there is the disruptors that we see in this particular space are companies like our startups like Napo, ManyPets, Fury Champ, and Lassie. Then we have direct distribution through embedded place, and in this particular space we have companies like Cover, like Boost. We'll talk about later about Cover Genius. They're utilizing embedded infrastructure to put pet insurance products at the digital point of sale. Now, through intermediate channels, we have Embrace and at PetBest that are utilizing affiliates to distribute their products. Then we've got Policy Advisor and Prudent Pet that are currently utilizing agent and broker channels to distribute insurance products. And then we've got Figo and Spot that are now offering their products as an employee benefit, of course, knowing that many corporations are offering pet insurance as part of their compensation packages. So if we move now onto the next slide, we'll see here a market map of the different players that we have identified within a geography location. Now, the conclusion that we get out of this particular snapshot is that more and more companies are starting to appear at an early stage, right? Now, given that the industry keeps growing, of course, more and more innovative players are going to keep popping up, and they're going to keep popping up with means of disrupting this particular market. Now, if we move into funding, what we see, moving on to the next slide, is that the industry has suffered a strong variation over the past 10 years. So from 2014 to 2017, there was very little investment, but in 2018 we can see it was reactivated thanks to private equity and M&A deals. Now, from 2021 and 2022 were the two strongest years due to increasing, again, private equity, M&A deals, and VC funding. But we have seen a decrease from 2021 and 2022, and we expect the same. We expect also a decrease for 2023 due to market conditions. Now, if we move on to the next slide, what we see here, it's a quick snapshot of the top investments, startup investments that happened during 2021 and 2022, excuse me. So the top three were Benefits. First of all, Benefits with a 350 million Series D. We've got Napo with an 18.8 million Series A. And then we've got Dalma with a 15 million Series A. Now, as we can see, there's many capital being poured into these innovative businesses, right? So this is something that we all need to be aware of on how are they disrupting the market and how we can learn and improve our internal processes thanks to these examples. So now we'll move into the insurance landscape, right? So we will start giving a quick snapshot of the different offerings. If we move on to the next slide, maybe I think we can see it better. There we go. So if we start we'll start giving a quick snapshot of the different offerings that they're currently in the market. Then we'll go for the top reasons for claims, and then some key challenges of the industry. Then Andres will conclude this particular section talking about the startup opportunity that we have within pet insurance. Now, coming into the different offerings, very quick. So we have accident only, we have maximum benefits, we have time limited, and we have lifetime, right? So the dots that you guys see in orange are the different offerings within the policy that some insurance also covered, but others don't, right? All the green dots are the different offerings that are covered by the policy, and the red dots are the ones that are not the offerings not covered by those specific policies. Now, moving into claims, we have divided the claims between accident and illnesses. So starting off with accidents, we see that lacerations is still the main reason for file claims, with an average price of $2,000 per claim, followed by bite wounds with an average price of around $800. And then swallow objects and fractures with $3,000, with almost $3,000 each as an average price of claims. Now, following now into illnesses, we see that gastrointestinal issues is the most common reason for filed claims, with an average price of $6,000. We've got skin conditions that follow with an average price of $4,000. And then we've got urinary tract infections with a $6,000 average price. And last but not least, we've got ear infections with a little bit over $500. So now moving on to the next slide, we'll be talking about some of the current challenges that the industry is facing, and we'll give the word, and then I'll give the word back to Andres to talk about the startup opportunity. So now to the challenges. First of all, humanization of the pet, right? So what we see right now is that 48% of owners consider their pets as the most important thing in their life behind their family, right? So knowing that is such a sensible topic for the customer, insurers need to adapt their communication methods in order to have a more humanized touch points. Now, the next one would be the rise of pet health costs, right? That puts pressure on the insurers to keep the premiums affordable. Now, the next one, what we see is that many insurers still do not offer policies that cover pre-existing conditions, right? And it makes sense. The main reason is in order to avoid fraud. But there are many customer complaints related to that, for claims that are not being approved. And these claims that are not being approved is because of illnesses that are related to a pre-existing condition and the customer did not know. Then we've got upfront payments that it's still a common process within the industry. But and what we see is that with the rise of pet healthcare costs and the still fairly long average claim processing times, of course, these upfront payments can be very distressful financially for many households. And then finally, the vets burnout, right? So according to the Veterinary Medical Association, we see that right now, 50.2% of vets are classified as having high burnout scores. And this is costing the industry around 1 billion on a yearly basis. So now I'll give the word back to Andres. Thank you very much.
Awesome. Thank you, Rafa. So after understanding the industry challenges, here we have actually the opportunity to see how startups can be a key player in this ecosystem. And startups can help large insurers across 4 main different categories. First, pricing. Startups have, or startups and their unique data-driven approaches can be a useful solution to better adapt pricing models to better control loss ratios. In addition, this helps larger book of business to try out new models by creating a clean slate to work from. Startups also give us the opportunity to sell adjacent products or embed our own into their offering, allowing us to increase product offer or even build up different services, for example. And lastly, startups can help create a unique, holistic view of our customers on their pets. Thanks to these unified platforms, owners can have a better understanding of their pets and how to better take care of them. So this is something that we all have already observed in multiple instances where startups are already excelling in the pet insurance value chain. And some highlights, for example, are ManyPets and how they were the original pet Insurtech who was able to digitize the claim management system, already signaling the market readiness and demand for similar solutions, or Napo with their unique way of administrating the policies and adding a lot of value and added value services to their offering to increase total customer lifetime value, or for example, lastly, Furichamp and their underwriting capabilities. Them being based in a country such as Sweden gives them access to a ton of unique valuable data that they can later process to offer very accurate prices based on breed, both for cats and dogs, with an extremely high level of granularity. And as mentioned before, startups can be a great addition to carrier offering, but also they can be a great way to detect early trends. And some major trends that we have observed in this early industry are, for example, televet solutions. The convenience of one's home getting 24/7 direct connection to specialists brings a lot of peace of mind to owners, while being a quick way to triage potential unnecessary vet visits. Or all-in-one apps where everything is becoming more and more centralized and unified for consumers' convenience, as seen, for example, in Revolut's case, where your own banking platform can also provide you with pet insurance. And this collaboration, of course, is not just us mentioning the potential of startups with larger ecosystems, but they're actually a reality that companies are seeking. For example, Accurate and ManyPets are working together to enhance ManyPets' pricing capabilities by automating the risk modeling, for example, or Chewy's and Trupanion's partnership embedding Trupanion's pet preventative care plans or insurance products on Chewy's portfolio, driving awareness within the pet care community and simplifying the end-to-end process. Back to you, Rafa, to guide us through the pet value chain.
Thank you very much. So yeah, now we'll be talking about the pet value chain. Now, if we move on to the next slide, we'll be starting talking about adoption. Then we'll move into CAP, then we'll go into adult. We'll end this section talking about senior pets, and of course, within each step, we'll talk about the opportunity that that insurers can have within every step of the value chain. Now, starting off with adoption, as we can see in this graph, the majority of pets are normally acquired through intermediates, right? Being animal shelters and breeders, the most common channels. Now, if we move on to the next slide, what we see here is a list of startups that help shelters and breeders improve their internal operations through management systems. And then we've got marketplaces where consumers can find pets. But where's the startup opportunity here? Where's the insurance opportunity here? So insurers can now take advantage of these new digital systems to identify interesting prospects and place those products at the point of sale. Right. So if we move on to the next slide, an example that I mentioned previously is Cover Genius. So Cover Genius provides embedded infrastructure for e-commerces to bundle insurance products at the point of sale. Now, they're currently working with pet digital companies like PetPal, for example, and companies like PetPal are utilizing their X-Cover integration platform to embed those products on their purchasing process. Now, if we move on to the next slide, when it comes to the prospect analysis, Social Leads, for example, sets a very interesting example. So these guys, by utilizing AI and machine learning, can basically analyze the customer's social media and identify strong prospects in the carrier's ideal candidate pool. So overall, what we see is that through players like Social Leads and Cover Genius, insurers can now utilize data that the digital management systems, our marketplaces, are gathering to identify those interesting prospects, and then to put in front of those interesting prospects the products at the point of sale. So now I'll give the word back to Andres to talk about CAP and adult pets, and I'll conclude with seniors. Thank you very much.
Mm-hmm. Awesome. Thank you, Rafa. So now moving on to the next pets development stage, we now go into the CAPS phase. And of course, when looking at the needs at every stage, it is crucial to understand that we're not only analyzing the needs of the pet, but we also need to go a step further and see what the customer need, since they will be the ones purchasing the policy, and they are the ones who will be educated and shown value to. And as such, here we see how, for example, puppies needs revolve around basic care, such as vaccination, deparasitation, bone development foods, or milk replacement formulas. Whereas here, we would need to be able to guide and navigate the owner across the multiple steps they need to take in order to set up their pets for a long, healthy life. There are many solutions out there that can help with this, but overall, this early stage can easily cost owners about $2,000 for a dog and about $1,174 for a cat, meaning that this is one of the most expensive pet ownership phases, and it will introduce consumers to pet financial pressure. So here we actually found that there is a great insurance opportunity, and the opportunity here is on early customer acquisition, and startups like Fluffy are achieving so successfully. They are a UK-based startup founded in 2021, where through a CAP training app, they're able to acquire pet parents even before they might even be thinking about purchasing pet insurance. Onwards to the next development phase of the pet, adulthood, we actually see a transition more towards an active, healthy lifestyle rather than just basic care. Here, pets need balanced food diets, of course, in addition to establishing healthy habits such as increased exercise, dental care, or skin and parasite control. And here, parents also need help. In this case, it is more low touch, with maybe some best practices tips or guidance towards a more autonomous pet lifestyle. At this stage, costs come down and stabilize. These are the years where actually like pet insurance can really bring a profit which is where the insurance opportunity relies. In this case, the startup we wanted to highlight is Oyen, a pet insurance startup based out of Singapore that has created a model where policy price is more evenly distributed throughout the entire animal policy to avoid later stage price spikes, increasing overall customer satisfaction and retention on multiple owners' or pet owners' policies. In addition, they have created a very interesting value-added services that drive customer satisfaction during all of the stages, therefore reducing customer churn. Back to you, Rafa.
Thank you very much, Andres. So now coming into senior pets. So what we see in the graph is once the pet enters the senior phase, the cost of healthcare starts raising, right, on a regular due to regular visits and emergency attendance that start to become more common. Now, in this particular phase, pet parents have to put a very strong emphasis within nutrition plans that can at the end slow down the dental and muscular atrophy of the pet. Now, because of the majority of insurance claims are filled during this phase, the insurance opportunity comes at the time of establishing a humane and efficient communication with the pet parent, right? So at the end, the objective here is making the experience more satisfactory in such a sensible time for the pet owner. Now, a good example of this is set by Usher. So Usher can basically utilize machine learning and email automation to fully automate the entire claim workflow, enabling the claims team to focus on complex cases like common communication tasks, while common communication tasks, can now be fully automated thanks to Usher's tool. So we have talked about, if we move on to the next slide, we have talked about the market, we have talked about the insurance landscape, we have talked about, the whole value chain, but what are the main key learnings that we get out of this presentation? So first of all, what we've seen on a general basis is that pet healthcare costs have been rising exponentially on the past years, right? Putting a lot of pressure onto the pet owners and making insurers adapt their premiums. Second, unexpected expenses keep rising, right? Making the overall healthcare prices to rise and then putting at risk the financial stability of the pet owner. Third, what we see is that 94% of pet owners did not purchase any product when they first got their pet, leaving a massive blue ocean for insurers. And then last but not least, additional health services that are incorporated within the policies can increase the overall lifetime value of the customer. So yeah, thank you very much for your time. Hope you enjoyed the presentation. Of course, if you guys have any questions, feel free to reach out. We'll be happy to answer them all. Now we move on to the fireside chat and hope you guys enjoy it. And again, thank you very much for taking the time. Cool. Alrighty. So for the fireside chat today, we have here with us. We have first of all Heidi Shirota, who's the chief pet officer and president at Nationwide. We have Alexander Doucet, CEO of Camkin, and Arthur Beziers, who's an Insurtech investor for Plug and Play. I'm sorry, Alexander and Arthur, for my French pronunciation. It's as you can see, it's not the best. First of all, thank you very much, guys, for being all here today with us. I will give you now the room to introduce yourselves. Maybe we can start with Heidi and then move with Alexandre. And then once we get those introductions going, we can jump directly into the fireside chat. Thank you very much. Back to you, Heidi.
Great, thank you. So excited to be here. As he said, I'm Heidi Shirota. I am the chief pet officer and the president for Nationwide's pet insurance business. Nationwide is the first and largest pet insurer in the US, and we protect more than 1 million pets. We've been at it for about 41 years. Actually, last week was 41-year anniversary. I joined Nationwide in 2018 as vice president of marketing for their retirement solutions business and led an expansion of capabilities and markets there. And before Nationwide, I transformed consumer experiences in human healthcare, United Health Group and at Aetna. and also was a marketing executive in the financial services industry for many years. Of relevance to today's conversation, I'm on the board of the Human Animal Bond Research Institute. And also because we've got a startup crew here, I am part of a startup called Cinema Lab, which is restoring old Main Street movie theaters and reopening them to eager audiences.
Awesome. That is actually great to hear. So thank you and welcome. Congratulations on the anniversary. And it's great to see a fellow startup passionate. Awesome. Thank you, Alexander. Do you want to go next?
Yeah, sure. I'm Alex Duzay, the CEO for Pumpkin. I've been with Pumpkin for almost 4 years now. Pumpkin was started as, if you may want to say, like a partnership between the team at Pumpkin and a large animal health company here in the US, but also in the world, called Zoetis, who manufactures and distribute a lot of the therapeutic product that exists and cure disease for pets around accident and illnesses. Prior to Pumpkin, you may say that, I have a career as an entrepreneur in the tech industry. I co-founded and led those two companies as a CEO. My first one was in the online recruiting industry. It's a company called Ladders that helped create a job marketplace for senior level professionals, kind of where we used to brand it as a 100K plus executive or 100K plus jobs. And then in 2015, I came up with the insight, and this is what my first foray into the animal health industry was. Out of a personal experience with one of my dogs, I invented and came up with a new dog food product called Ollie, which is a human grade quality food that is personalized based on your dog's attribute. And the personalization is mostly around portioning, to ensure that people could feed the exact amount of calories they need per day, the right what's called resting energy requirement, so that you can keep your dog at an ideal weight for them through most of their life. And if you do that, you can actually expand the life of your dog. So I started a company in 2015, led it as a CEO and founder for 5 years. Company has raised like over $80 million, doing north of 100 million revenue. And then 4 years ago, I stepped down from my role as the CEO of Ollie to be able to do Pumpkin in partnership with Zoetis. And we launched Pumpkin in the spring of 2020, in the middle of like the lockdown of COVID. So that was a very interesting time for us to come to market and be expanding our offering across 50 states in the US.
Lovely. Thank you very much, Alex. And love to hear that personal experience within the industry. I think that's one of the things that, at least from a VC perspective, drives us the most, which is not only kind of the experience that the person has over the industry, but if there is any personal experience that have driven through this to launch this idea and to get into this particular business. So thank you very much. Arthur, just to end for the presentation times, I'll leave the room to you.
Thanks, Rafa. Thanks, Andres. And thanks a lot for the opportunity. And I have to say, great presentation, guys. Very happy to be here today. I have the chance to exchange a bit with Heidi and Alexandre on the exciting topic of pet insurance. So for myself, as mentioned, I work in the investment team of Plug and Play in Munich, with a focus on Insurtech in Europe. So I guess I'm bringing a bit of the European perspective here also. And last year I looked quite a lot at the pet insurance topic from two sides. The investment side, obviously, we assess a few deals in Europe, actually, most of them together with Andres, and also from the, let's say, corporate partner side, in the sense that pet insurance was probably with, let's say, cyber insurance and / cyber security and anything related to Web3, one of the top topics from our partners in 2022. So in this sense, our partner explored the topic to understand how they could launch, how they could potentially distribute pet insurance, and how they could also potentially partner with key tech players to either better serve their existing customers, but also to access new segment of the population, such as the Gen Z, which, as my colleague Andres and Rafa already mentioned, are more and more accounting for a big part of the pet owners. So that's also one of the big topics that we kind of explore together with our partner this year. And yeah, extremely happy to be here today and being part of this discussion.
Great to have you all. Great. It's been already like quite an experience, a great experience exploring the pet insurance market with you, Arthur, also. So really happy that you also were able to join us. Awesome. So for this fireside chat, of course, the intent is to keep it as a conversation. Jasmine also mentioned you can post any questions that you may have from the audience. We will be addressing those also, hopefully. And yeah, as mentioned, let's keep like an open conversation. Maybe we address like some questions to some of the panelists specifically, but feel free to jump in if you have like any quick comments. But I guess a good first, as mentioned also at the beginning of the presentation, we want to talk about the business of pet insurance, and a big part of that, or the elephant in the room, is profitability in the pet insurance, right? So maybe Heidi, like starting from you, with all the experience that you have on Nationwide, right? Being one of the largest pet insurance providers in the United States, what are your thoughts maybe on like general insurance profitability, and maybe do you like really see it as a viable line? Can you elaborate a little bit on that?
Absolutely. You know, I will say it's not an easy business, right? We've had 40 years to figure this out. And I think we've made really great progress here, and do see it as a very viable line of business. At the same time, being able to deliver substantial value to our members. A big enabler for us is scale, right? The fact that we're the largest pet insurer, we have more than 1 million pets. We have a value proposition when we go to partners, for example, that enables us to partner with them and bring them an amount of volume that is meaningful to them as a business partner. It also means that we have more negotiating power, that we can cover our fixed costs and run efficiently. We can, really work our plans to give the most value and benefit to our members because of scale. So that's one of the really important aspects of being a profitable pet insurance company. And then you marry that to the fact that the pet insurance industry and pets themselves in families are growing so quickly. So you've got sort of both of those levers going, the growth and the profitability. And it's a delicate balance. It's not easy. And, any insurance, you live and die by your decisions, but it happens 2 or 3 years down the road. So you really have to be careful about the decisions that you make, whether they be pricing or product features that you offer, or, what you pay in acquisition costs or what have you.
Fully agree. And you did mention, actually, like I remember not long ago, as I mentioned also at the beginning of the presentation, I love nerding about these topics. And not that long ago, I was talking with one founder, one pet insurance or pet Insurtech founder, and we were talking about like unit economics, for example, like how important those are. You are mentioning about like pricing, like we all know like insurance, how like the cost spread is divided into the different categories. So from like a pet insurance perspective, what are the most interesting unit economics in your opinion?
What are the most, say the last part of the question again, the most interesting
like what, like in terms of like what makes this space interesting in terms of like unit economics?
There's so much that's interesting about it. I think something that the newer entrants into the industry have to grapple with is cost of acquisition. Again, we've created a machine. We have a diversified mix of channels. So when one is more expensive, we can move to another for new product, new member acquisition. There are, as you mentioned in your presentation, a lot of ways to get new customers in, but they're very expensive. And so being able to really optimize on what I want to do in the direct-to-consumer space, what I want to do in the voluntary benefit space, how I want to handle partnerships. And for us, even our friends and family referrals is a huge part of our business. Again, back to scale. When you can create happy members, you can get them to refer you, right, to their friends and family. That's a tremendous part of our business and our best, most profitable channel, our lowest cost of acquisition, and our most loyal members. So that's the whole acquisition picture is the first thing. And then obviously you need to get some efficiencies in how you process claims, you know, and a range of other things that are part of your operations, your member care and so on. Again, that comes with scale, automation, you know, AI is starting to play a big role, those sorts of things, super important. And then of course, getting the pricing right, getting your risk, you know, assessment right and pricing the product right, so that you're not hurting down the road when that pet ages or you know, thinking about different breeds or species or what have you.
Thank you very much. No, it's absolutely right. And one of the things that you mentioned, which you know find very, very interesting, is that you know in order to both you know acquire and retain those customers, how necessary is to offer you know some type of value-added services, some type of services that can you know holistically improve the experience of the customer. So maybe now moving into Alexander for this particular topic. Out of your experience, is there a way to or you know based on your opinion, what's the way to increase the customer lifetime value, you know, by utilizing this particular knowledge? But so yeah.
Yeah, I mean, it's a tough question to answer. To be frank, I think you have to look just like first and foremost at the core offering. Right? Pet insurance is still a very early nascent product offering, even though you know people like Nationwide have been doing this for you know let's call it 40 years. You know, we're gonna get the report from NAFIA in no time, but we have a little bit of an insight that in the US we are approaching 4 to 5% of what I call medicalized pets who are actively visiting veterinarians on an annual basis have an insurance now. In 2005, 2006, that was 1%. In 2019, that was 2%. So there's acceleration in the market, but the majority of pets and pet owners don't insure their pets. Why is that? Mostly because it's not a required, right? Pets are a property casualty. So you're not required to insure. And there's a lack of understanding of what it takes to care for a pet holistically. Like most first time in your report, most of those like millennials or Gen Z first time pet owners, they don't really know what it takes to raise a pet. They've never been through an end of life experience and see what it can be without having the benefit of an insurance, right? Mm-hmm. They know about the wellness and the routine care program, and they know that you know this pet has to be fed every day, but outside of that, they don't really know all that much. So there's tremendous amount of education. And I think that's more the focus. I think once you get someone as a pet owner, it tends to be pretty sticky, regardless of the brand. If it's Nationwide or Pumpkin or something else, it's very, very sticky. We see very, very strong retention numbers from pet owners. Now, can it be improved? Absolutely. And that will have a play into lifetime value. Can you improve the unit economic and improve the pricing so that you have a profitability that also increase your lifetime value? I'm not really personally a huge fan of saying, hey, because it's such an early product, the goal in the game is to say, let's acquire people, sell them pet insurance, and let's upsell them to other products, because there's such a need to fundamentally educate the marketplace, not just as a brand like Pumpkin, but just for us as an industry to explain what we do, the value of it to the pet owners, to veterinarians, to the regulator, right? There's a pretty sizable education all around to more than legitimate this insurance line of product and service, and really kind of change the mindset that says this is not a nice to have, this is not a luxury type of item or product service, it's a must have. If you want to be a conscious pet owner and you really care about the bond that you have with your pet and you want to be really expanding that relationship, pet insurance is not a nice to have, it's a must. You just have to do it. But there's a huge amount of education because we're not there yet.
That's very interesting. That's very, very interesting, because one of the things, you mentioned the idea that pet insurance is still has a very low penetration rate because it's not mandatory, right? You don't need to have that insurance for your dog, right? So one of the things that we saw here in Spain is that not too long ago, they made mandatory third party liability, right? So right now, dog owners by law need to comply and need to buy those specific policies. Do you feel that if it doesn't come from a conscious level owner, it would come from a law or regulatory level that covers around health or accident offerings will be also be required by law? Because yeah, I mean, as you said, right? If this doesn't happen on a personal level, if people are not conscious enough, do you feel maybe enforcing the law in this particular space and making it mandatory is something that we'll start to see in other countries?
It's super complex, and I'm sure ID will jump in on that as well. And I think you have to be mindful there's a huge difference between different countries. So, you just mentioned what Spain, I'm not as familiar with the older European markets. I don't spend much time studying, but at a high level, I know that, for instance, in the UK, the market has a higher penetration, it's closer to 20 to 25%. Some of that has to do with the regulatory flexibility and framework. I know in Sweden is more of a requirement, and you see a higher percentage there, like maybe close to 60%. In the US, I'm more skeptical because pet insurance is not regulated at the federal level. It's regulated at the state level. And we deal, with this issue all the time as companies, but also as a group called NAFIA. Every state is drastically different, right? And I think to get to a place where pets are recognized and have to be registered, and then there's a kind of framework moving towards like making it mandatory, we are years and decades away from that, right? We even trying to do small thing as an industry here is like, hey, can we change your regulatory framework so that you could maybe pay for it out of like your growth income, the way you come to pay for healthcare? Or can pet insurance be categorized as something that could be paid through an FSA type of payment in the US? Well, in some states are starting to think that way, but it's slow moving. Right? It's going to take a long time to move that boulder down the path. So I'm not super hopeful that like in the next 5 years to 10 years, the regulatory framework change drastically, that it requires pet owners to do. I think the lever that we're going to have to flip collectively as an industry is education.
Got it. No, that makes sense. I mean, one of the drivers that we saw, and maybe we can touch bases on this, is how distribution can be truly powered up through employee benefits, right? So if it's not law who's going to enforce it, maybe companies that are aware that now this kind of products need to be offered as a mandatory perk for the employees. But again, within this particular offering and distribution method, we are seeing some challenges, right? So for example,
in that line, I think for us with our brand and our focus, we're very aligned because of our relationship with Zoetis on the veterinary community to provide an education and explain to pet owners through veterinarians what's the benefit of pet insurance, right? And obviously they can recommend a few brands as a byproduct. You mentioned employee benefit. This is something I know like IDs and your team are very involved with. I have a little bit less experience there, but some knowledge. I think the shift some days, and I don't know when that's going to be, on the employee benefits is the day new employees dictate and demand that to create an attractive package, you have to provide coverage for my pet. Like today, any employers provide healthcare coverage for your dependents, your significant other, your wife or husband, your children. Many people, when you show this in your survey, look at pets and say, it's part of my family. But right now, very, very few companies, almost none, really put their money where their mouth is and say, oh yeah, I'm willing to provide some funding towards paying for the premium and the coverage, right? It's much more of an elected benefit where we get plugged in into their employees' benefit portals, and there's a discount offered to that, right? I think we're not going to change that personally as companies. I think who has to do that are the next generation, the Gen Z, the millennial, to go in employer and say, you're not competitive, it's discrimination. I choose to have pets instead of having kids. These are my children. Why aren't you providing coverage for the healthcare? Right. And by the way, it's cheaper to pay coverage for my pets than it is to pay healthcare coverage for my kids. So I feel that's going to happen at some point. The timing of that, capable of giving you. I don't know if ID has like a view on this, but to me, that's a potential shift that could really unlock this market in the next 5-10 years.
Yeah, I would just add, from voluntary benefits perspective, I think I agree that legislation is a long time out, right? You saw what it took to pass human healthcare legislation, and presumably humans are, top of the heap in terms of legislators. But I do think that employers are going to get the cue and are getting the cue regardless of legislation, because they want to keep their employees, and Gen Zs and millennials are expecting their pets to be treated as part of the family, and in fact would consider another employer. About half of them would consider another employer if that other employer offered pet insurance or a pet benefit of some sort and their current employer didn't. So it's that important to them. And we're seeing that. We have our pet insurance in with about half of the Fortune 500. We have about 10,000 different companies that use us for pet insurance. We're a significant part of the market, but there are other carriers in there as well. I do think the leading edge companies in terms of benefits, or who like to innovate in the sort of personnel space, I think that there will be some experimentation with the employer funding the pet insurance. We probably need some work in the industry on, group plans versus, individual plans and that sort of thing. But I do see it picking up steam in the employer space. And, just testament, the top 3 voluntary benefits distributors, that would be MetLife, Aflac, and Unum, all have a pet insurance partner embedded with their offerings, right? They wouldn't be doing that if it wasn't being asked for, if it wasn't important, and they're investing a lot of money in that. So this is, we have, sort of opened the box. There's a lot of stuff that's going to come out of that box.
Yeah, actually fully agree with both of your points. I think and it's becoming more and more of a topic, since it's so hard to kind of attract and retain this new generation into corporate. I think this kind of employee benefit could be like a big differentiator for some of the employee, especially if you're targeting a specific segment of, let's say, the employment pool. So I think this, and if we come back to the question on regulation, I have the strong belief that this will happen at some point, but that is not the biggest driver right now. If we look at Sweden, for example, which, like we say, it's the country with the biggest penetration of insurance, there is no public policy that forces you to have a pet insurance. It's more becoming from awareness and the positioning that the pet has within the family. So when we look at survey from Sweden, is the same. People tend to consider their pet as a family member. And this is something that has been there for a long time. It took time to get to this kind of level of awareness and kind of acceptation of the pet with this positioning. I mean, you have been ID doing pet insurance for 40 years, but in Sweden, for example, the first one was, I think, almost 120 years old. So it took time, and I think this is something that is catching up all around Europe and all around the US. I cannot speak as much about the US because I'm less focused on that, but I think it will be more around education, maybe pushed by the employers also, and bit less regulation. The regulation might come, but on a longer scale.
Yeah,
I actually love, sorry, Katie.
I was just going to say, I think we do ourselves an injustice when we talk about our pet insurance adoption in the US versus other countries. Just given the sheer number of pets we have in the US, I think you said 164 million in Europe.
Yeah.
I don't even know if that includes avian and exotic or if it's just dogs and cats, but anyway, it's a lot. And I don't have I did do some research on numbers of pets in other countries. I don't have those numbers in front of me, but it's like 10 million in one country, 6 million in another country, 20 million in another country, right? So I got to think that the folks who do actually have pets in those other countries where that pet insurance adoption rate is high is also because the people who have pets are highly bonded, right? If you have a pet in those countries, you are super highly bonded, whereas in the US, we have a range of situations with pets, right? We have tons of highly bonded, and our 3 or 4 million insured pets are equivalent or greater than the X percentage insured in another country on a lower base. So I think we just cut ourselves short in that discussion.
Yeah, no, I think it's a good point. And just to even build on that, and there's a bit of this analogy with what you see now, the spending on pets. I think food is an interesting one. And I just happened to spend a few years in that space. When you look at the pet insurance market, and this is not just unique to us, you take the NAFIA report, take the top 5 or 6, 7 states, and that makes 55% of the entire market. If you look at a state like California, penetration is almost as high as like 10 to 15% of pets. But then you're going to look at more rural, central, Midwestern states, and you can see penetration being below 1%. Right. So I think that's speak to what Heidi is talking about, is this correlation of like how bonded are you with your pets. If you're extremely bonded and you also maybe come from a socioeconomic background where you have more disposable income, you might be more inclined to spend up. We saw that in the market for food, right? Like the biggest challenge I had with my prior company when I was launching it is I was bringing a better product to market, but to deliver a better experience to people, they had to spend up. They had to spend essentially 2 to 3x more per month on feeding their pets with that product. That was a tough sell initially, but eventually it took off. It took off with a segment of people who are very bonded. And it's a category not just for the brand I created, but there's other brands along the side. That category has reached more than $1 billion in sales and is still growing at 20 to 30%. Right? And I think to me, there's a lot of analogy that are applicable to pet insurance. Is when you look at the segment of the market in the US with pet owners who are highly bonded, it's a less of a tough sell. Like people kind of get it much more. They still need a requirement for education, and you can see higher rate of penetration and maybe start to mirror some trends that you see in market like Sweden or the UK, who are a little more advanced than we are, because there's a bit of a story of two tales in the US. Not everybody is equally footed from the way they perceive pets. I mean, Heidi mentioned it, like 165 million pets. That's just dog and cat, according to the AVMA. What I looked at is the data we have with Zoetis, medicalized pets. That's 100 million pets in the US. So 65 million, you can categorize on they're much more kind of wider each type of pets who may belong to a family, but they may not come and sleep on your bed, right? They may be like hanging outside, and the vets doesn't really ever get to see that person. That kind of pet is going to be tough to make a pitch for insurance if they're not medicalized. And then with people like in California or in New York or Florida and Texas, who are very bonded and medicalized, they see the value prop of having insurance.
And I think that drawing that parallel also like with Europe, I think it's fairly accurate. Like seeing that difference between states maybe and like also countries, right? Something that maybe we are also not taking into consideration is also costs. So for example, I know here in Spain, pet costs, or in France, for example, pet costs or vet visits are not as expensive. Maybe whereas, you know, like in countries like Sweden, for example, like they are significantly higher than here in Spain, right? So do you think that in the US is going to also like drive pet insurance adoption, and maybe like how will televet solutions that will reduce these costs affect that also?
Yeah, but it's a good question. It's hard to like make a pure like fair apples to apple comparison, because there are so many drivers. While the average household income in the US is going to be higher than your average household income in Spain or France. Like I'm gonna give you an example. This is just an anecdote, but like it's true. Like I was in France at Christmas, my daughter got sick. We had to go see a doctor. I don't work in France, so I don't have medical coverage there. I have to pay out of pocket. But a doctor visit cost me 25 euros. I take my dogs to a vet for an annual exam just to get a vaccine, and the wellness visits is going to be 60, 50, $75, right? And so that's where the perception, it comes like, well, it's very expensive in the US. Sure, but if I benchmark that to human healthcare, veterinary medicine is still extremely affordable in this country. So you have to look at the ratio of like disposable income to the cost of veterinary medicine. And I know, as a matter of fact, that like many veterinarians in this country are still underselling and underpricing their service. Like the industry suffer from a lot of like burnout and lack of profitability because there is that heightened sensitivity that I'm overcharging for my work and my service. That shouldn't be, but more insured pets will also alleviate those friction, because we are the mechanism that enable the enablement of like the best gold standard care, and we remove the friction points of like on payments to practice and say yes to the veterinary recommendations. But as insurers, we have to be profitable. Like the cost of veterinary care goes up. Inflation is 5, 6 to 7% on an annual basis. That's the underwriting cost that we underwrite, and so we have to be factoring that into our pricing model. So veterinary care goes up, guess what? Pet insurance cost is going to go up.
Mm-hmm.
I can add some flavor here too, just from our position at Nationwide. We're really focused on, and our overarching objective is really to significantly improve access to care and protect more pets. And we see those things as going hand in hand, and agree that costs are going up and there's all kinds of factors. But again, back to the idea of scale, we are intent on and have been successful in working with major brands in the pet health space to bring down the cost of care, to integrate some of the aspects of insurance and care. A great example of that is we have a Pet RX Express program where you can go today to any of 5,300 Walmarts or Sam's Clubs and pick up a prescription for your pet at a significant discount below Walmart's already low prices and generally below the veterinarian prices. Also, we will process and adjudicate the claim on the spot. So it works like human health insurance when you go to those pharmacies. And we're expanding to other pharmacies that want to join us in that. And another example is, you've probably seen us announce a partnership with Petco, and we're working with them to kind of create that same environment with the care at their veterinary centers and their vaccination clinics, where we will have some level, and I can't define it yet, some level of integration between the insurance policy and the care that the pet receives. That will be offered at a preferred price to our members exclusively. And over time, we think all of these things work together. It impacts the premium. Obviously, it impacts your ability to get care because there's more accessibility, there's lower prices. We'll work on making sure that our health outcomes are good. And also, when you have these kinds of partnerships, you can then bundle in different kinds of perks and services and things like that. One other thing I would just add is we did a study of revenue to veterinary practices among pets that have nationwide insurance versus any other pets. So any other pets is mostly pets without insurance, but could include other insurance carriers as well. And what we found is that nationwide insured pets double the lifetime value of a veterinarian, and dogs deliver 80% more annual revenue. And that's because people can say yes to getting whatever care they need. There are probably similar numbers for other carriers, I don't know, but just as it relates to Nationwide, that was really breathtaking, those results, and just speak to the ability of a product like pet insurance to be able to give your pet the care it needs without having to think twice.
Yeah.
And honestly, I think that's the beauty, and hopefully that's what we get out of this conversation, to get everyone a bit more interested and help the entire ecosystem grow. As you mentioned, if you have this perk disposable to you, then you might bring your your pet to the vet, right? Driving also the whole growth of the ecosystem. So this is sort of like a flywheel effect where the more, like the more adoption, the more the ecosystem grows, the more consistency there is, the more adoption. So I think it's pretty cool.
Yeah, Andres, in your prior comment, you mentioned like the progression and development of like telemedicine, right? And that there's many players that popped up over the years, as many of them coming from Europe and trying to expand into the US. In one of your slides, you were showing about one of the driver of illnesses cost was GI issues, right? And when you talk to those different televet providers, usually they tell you like 70% of the calls they get does not have to result in a follow-up visits, either to the emergency room or to regular visits to the veterinarians. And guess what? Many of those calls are related to either my dog vomited or my dog is having some GI issues, right? And that can help lower the severity of claims, because if I'm spending whatever the cost, $50 on a television, or maybe it's embedded into the cost of an insurance service, and I'm getting enough information that 7 or 10 times I don't have to do a follow-up visit, that can be meaningful for us behind it, because that means the visit would have been resulting in a claim that most likely is a valid claim and we have to pay it. And so there are tools like this that enables, and we'll probably see more of that with the evolution of AI in the coming years, where there probably be ways to deliver great care, but don't always necessarily have to result into a visit.
Yeah, exactly. And we talked about, sorry, Arthur, go ahead.
I was going to say, I think teleconsultation is definitely something that we have seen like quite a lot, but we see also a lot of different other innovation that can help to triage this kind of visits. I think in the call we have Michael from Cooper Pet Care, which actually they have developed something quite cool there, like a bit in the same way that we see it in the health industry. Also, they have developed this AI-based symptom checking for your pet, so you can from your place at home, you can check like some basic symptom and have like kind of a recommendation at the end. Is it urgent? Do you need to go to your vet, or is it other like kind of action that you can take? Is it something that will actually pass by himself? So I think we are seeing more and more of these kind of easy tools that are given as added services to the pet insured. And yeah, I think that will also in the end decrease the overall cost in this space, because if we give more kind of self-services tools to the pet insured people, and on top of that we also give them the right education to use that, I think in the end it will also decrease the overall cost and will make also customer being more happy with the health insurance and be more sticky with their provider.
Yeah.
We only have a few minutes left, so hopefully I can condense a few of the questions that we have on the chat, because we want to address those. So we're talking about tech here. Of course, like we are seeing, here we have like on the questions, we have like microbiome testing in different indicators. We have a question on wearable tech, and we're talking about like underwriting pricing. Like, how do you see this new tech coming affect the underwriting, and how long is it going to take, maybe like that gathering of data in order to be, or like have like a full effect on underwriting?
Yeah, maybe I can jump here. I think underwriting and pricing is definitely like a key topic for pet insurance, and it's also something that I've seen, at least from my partner's side, that large incumbents usually struggle a bit with. Because as we said, it's a bit hard to actually accurately assess the risk of a given pet. If you look at most of the underwriting process for the big insurance, it's still very basic. You'll be asked, what's the breed of your pet, what's the age, maybe your location. You touch upon pre-existing condition. This will also be one of the question, but I mean, this is still very basic. And what we are lacking a lot, as you just mentioned, Andres, is having access to other factors. Is your pet doing enough exercise? Are they like overweight? Are they eating the right way? And this is also because we have a big lack of usage of insurance when it comes to the pricing of those products. And what we are seeing in terms of technology that could maybe like change this a bit is there is the usage of more technology that could include anything related to IoT, I don't know, like an activity tracker on your pet to make sure that they are doing the right amount of activity. Sorry for that. Or as maybe also ID mentioned, we see more and more like a company either building or participating into pet ecosystem, like such as pet food, pet services, clinics, and so on. And all of this help you to get all of the right data to in the end have the more personalized way and more data-driven way to do your underwriting, and in the end, even more like tailored pricing to your customer. And also, as Andres and Rafa, you mentioned, this is a trend that is pushed a lot by the fact that more and more of the pet owners are young, or like younger generation. So they are more and more willing to give you access to this data, and they are also more and more like kind of likely to be using tech to monitor their health and overall like kind of security that can give like very key insight and key data for in the end the large insurance to assess accurately the risk on a given pet.
Lovely. And if I can kind of like work on what you said, there is one particular thing, addressing some of the questions that the audience has, which comes, and maybe Heidi, you can tell us a little bit more about this. When it comes to pre-existing conditions, right? So as we mentioned during the presentation, illnesses related to pre-existing conditions come as a surprise for many customers. So we'd love to understand from your perspective in terms of underwriting, how we can enable carriers to better identify pre-existing conditions. How can they underwrite it and place it within the offerings of the policy, and of course, make sure that this kind of surprises or improve the insurance education on relation to the offerings provided at the policy, that do not, that at the time of filing a claim related to a pre-existing condition does not come as a surprise for the customer. So we'd love to hear your experience on this particular area.
Yeah, what we learned is that process of figuring out that a pet may have had a pre-existing condition when you're a year or even a month into your policy is not a satisfier for our members, and it also delays our ability to pay their claim quickly. And so about a year ago, maybe a little bit longer, we started upfront underwriting on our products. And so what we do now is at the point of application, people self-report certain things. We take them through a guided list of questions. It's brief and easy. And what it does is then sorts those applications into, I need to go do some underwriting on these, and these can just sail right through. And that gives us the opportunity to evaluate the pet upfront, get those medical records before there's a problem, make those determinations. And it also gives our members the chance to say, you know what, if you're going to exclude these 3 things, this policy is not worth it, or maybe I need a different coverage or whatever it is. And it improves the turnaround time, of course, of our claims processing. During the pandemic, there were so many factors, but all pet carriers were taking a long time to process claims. One of them for us was this idea that we weren't doing upfront underwriting, among other things. But today we've got our claims pay time down to about 2.8 days. Is when you can expect to get your reimbursement. And in fact, 97% of our claims are paid in 5 days. So it's made a pretty substantial difference, and our satisfaction scores have gone up. Just across the board win for doing this. We were a little nervous because it puts a little more homework on the person signing up for insurance at the front end. But we've done our best to make that a very seamless and easy flow for people. And like I said, it has really paid off rewards, I think, for our members and for Nationwide.
Yeah, maybe if I can
Yep.
add to, in addition to what Heidi is mentioning, there's 2 things that might be interesting to consider when it comes to pre-existing condition. The first one is, if you look at the industry data, average age of pets who sign for pet insurance is really on 2 years and half, 2.5 years, 2.4, something like that. So one of the great benefits is that most pre-existing conditions that may not be covered by insurance, tends to develop later in life, not so much in your years. So the best way to protect yourself against pre-existing condition, insure your pets soon. Like as soon as they're a puppy, lock them up. If there's no medical file, guess what? Whatever comes up later is going to be covered, right? No, it's not like a silver bullet that's going to solve it all, but it's definitely one part that is helpful, and the education comes into play. The second part is, I think, one of the bigger challenge, and that's something as an industry we just have to address. Many times there's a disconnect between what's in the medical file and what the pet owner is aware of what's in the medical file. So what they may hear from their practitioner or veterinarians, it might be very different than what's being documented in the medical file, what's called the SOAP notes, right? We as insurers go by what's in the medical file to make the yes/no decision on claim payment, right? And I think many of the complaints we see with us or with others tends to be on that disconnect, where people say, hey, you denied my claim, you pretend it's a pre-existing condition. My dog doesn't have this kind of pre-existing condition. They never had this issue before. And we're like, well, no, we got a medical file from your doctor, and this is what the medical file says. The problem is that transparency does not exist today. It's very opaque. It's very hard to see, and it creates for bad experiences, bad surprises that leads to buyer's remorse and frustration. There's a way to solve it. I think, all of us can solve it in different ways, but is one of the big pain points that exists today, right?
Mm-hmm.
Yeah.
And I know I've had personal experience with my own dog and my own vet, and I was like, no, that's not true. And then we're like, oh wow, it is. This is what they wrote down. It's like, well, man, that's a problem.
Yeah. Another thing, just Alexander, I don't know if this is true in your organization as well, but probably about a third of our associates are veterinarians, vet techs, nurses. Like, this is their second career. And so the people that are looking at these things know what they're looking at. It's not somebody we trained to read SOAP notes or other records. These folks have actually been in the clinics, in the hospitals, and it makes that obviously a much smoother, a much fairer process.
Yeah, I mean, I think it's pretty standard across all the brands of pet insurance. Like, the adjusters are former veterinarian technicians, do have a lot of medical, like usually like 10 years of medical experience, and they've used to write those SOAP notes, or they read them and interpret them, so it makes it for a fair process. That's 100% accurate.
Awesome. I think that was extremely insightful. Unfortunately, we are running out of time, and maybe like one quick question for you, the three of you panelists. If you would like to, for the participants of this session, to take one key learning, or maybe like one key takeaway out of this conversation, what would you say that would be? Maybe starting off from Arthur.
Yeah, sure.
I'm throwing you under the bus. Sorry, man.
Yeah, no worries. I'm gonna be a bit general here, but like, I guess main takeaway, it's still a very big and growing market with small coverage, right? With low regulation. So there's also a lot of things that insurance can do around the product, and in the end, like very, very huge opportunity. So that's still something that at the same time, insurance and tech company could really focus on, and there's still, like, I think a lot of good days ahead for pet insurance, and we'll see more and more of this penetration getting up. And I have a strong belief that we'll go maybe not as close as Sweden, but closer to this.
Yeah. I can jump in and just say, I don't have those numbers in front of me, but when you showed those generational charts and like the amount of time that different generations spend with their pet, the amount of money they invest by age, that sort of thing, was really enlightening. It's not data I've seen before. And I think it's really helpful in understanding who needs what kinds of products and what kinds of care, and how do we tailor those products and those protections. And by products, I also mean the delivery of care, not just the insurance, to really meet those needs and help people keep pets in their lives. Pets are good for people. Human medical savings, huge human medical savings result from pet ownership. And so they're good for people, and people are good for pets.
unfortunately, and sorry for interrupting, Alexander, but that was actually a topic that I was talking with one of our partners, and this is something that we didn't cover in this presentation, but how actually by having pets, you may affect your like general health insurance policies, right? That is a very interesting topic, and unfortunately, we don't have the time to cover it. But
$23 million in medical cost avoidance annually. Billion, not million. I'm sorry, 23 billion annually.
Yep. Exactly. That's amazing. Anyways, sorry for interrupting, Alexander.
Yeah, no, I think for people to take away from this presentation, at least when it comes to the market in the US, and I would assume it applies to just the broader market in the Western world, it's still very early in pet insurance, and there's going to be some evolution, innovation. There's going to continue to come in. I don't think we're going to see a slowdown in terms of the strengths that how people are bonded with their pets. I think that's only going to increase, and it's going to really spread across many socio-economic backgrounds. And I think that will be continue over the next 10 years to be the main force, the secular trend that helps drive this adoption up, right? Because it's needed, right? It's not just like a nice to have, as I say, like pet insurance is not a luxury. It's really something that you have to do, and people will learn that it's essential, and they'll get on the bandwagon because the value prop is there. It's a strong value prop, and we'll continue to see innovation and change the number of coverage and the way it's marketed. But I think there's going to be an exciting dynamic industry for the next 5 to 10 years.
Absolutely, 100%. And one of the things that we hope to see is the role that startups and strategic partnerships within large corporations and startups will play on the development of this industry. But unfortunately, guys, we need to wrap up. I have to, give a massive thank you to the three of you. Thank you very much for being here. It was an amazing fireside chat. For all the audience there, thank you also very much for being here. Hope this was insightful. Again, if you want to stay connected to any of the panelists or Andres and myself, you feel free to stay connected. If you have any additional questions, feel free to send them over. We'll be happy to answer them. Again, guys, thank you very much, and I'll give the word back to Junko to wrap this up.
Right. We have come to the end of this webinar. So I would like to thank you, Heidi and Alexandre, for joining us today. So before closing this event, I would like to share our upcoming webinars. So we organized parametric insurance for catastrophe webinar on May 3rd, and the webinar about AI and AI in involving underwriting environment on May 24th. And also, we are super excited to have you all at our summer summit in June. Great. So we will have all Silicon Valley-based verticals come together to hear batch startups, and we also organize many workshops and networking events during the summer summit. And our animal health and agtech team will organize expo on June 15th. Oh, can you move to the next slide? Great. Yeah. So if you haven't registered yet, please register for the events as soon as possible. So please feel free to reach out to me if you have any questions about our upcoming events. And again, I really appreciate that all of you are taking time to join us today. I hope you enjoyed this webinar. And lastly, we'd like to hear your feedback. So please fill out the pop-up survey after the event. So have a great rest of your day, everyone, and hope to see you soon. Thank you.